under the hood of Nike, a brand that really needs no introduction, famous around the world, one of the world's biggest brands, owner of the Air Jordan franchise and other strong brands like Converse. But it's been in trouble of late. Had to go out to a monthly chart just to look back at how far the prices come down from a high in November 21 of $170. It's really been cut down to a third of where it was, falling to under 60 back in April of this year. And ultimately, this recent rally is some of the reason we're interested in it. But you can see it last traded at these prices even before the COVID lows. We've gone below the COVID lows on that downtrend. Admittedly, we've regained that now. But, we're talking even 2015 prices there for a period of time. And for good reason, though. For good reason. If we take a look at the most recent fourth quarter and full year results, full year revenue just in less than a month ago now. We're filming here 22nd July. Full year revenue down 10%, which is not really what we want to see and fourth quarter down 12%. So anyway, you can see now why the actions happened. There's a lot of analysis on this. Ultimately, it was the former CEO, John Donahoe, and the direct-to-consumer focus that upset a lot of retail partners. And you can see how that's deteriorated in the financial statements. Taking a quick look at ROIC here. And if we take a look at some of the numbers, the first one's gross profit. We are off the peak of gross profit seen in 2023, 2024, etc. But we're ahead of where that price was back in 2016, 2017, etc. And we're ultimately buying a company at a better price now than it was back 7 years ago at a greater gross profit. But if we keep going down, there are other expenses here in the operating line. They don't break out R&D, but selling, I guess, general and admin is where the bulk of that's been. And these costs have gone up, leading to a smaller operating income. But what we're hoping, if you were to take the long side, is that this is an anomaly this year, this operating income, and can it return to some of these higher numbers? You're getting a stock at something like 15, 16 times earnings for a really strong global brand. Take a look at how this plays out in margin. You can see how the margin, they've enjoyed those 12, 13, 14% margins for a long time, several years. They were able to juice those a little bit through COVID and got carried away, but that's really declined now this last year. So really it's a bet on the new management and can they return the business to these sort of margins. And it's not a given. You may have seen the Power Moves show with Shaq and Reebok coming out and re-entering with a new focus. One thing was interesting from this program was that Shaq admitted they don't aim to be number one. Nike is too far gone, and how entrenched Nike is with all the colleges and getting all the athletes signed. And it actually showed that Nike is going to be really hard to compete with. So I saw that as a favourable thing. All right. If you have enjoyed this, please give it a thumbs up. Quick disclaimer, this is not financial advice or a recommendation to buy or sell a security or any instrument. It's produced for educational and entertainment purposes. Do put any comments or questions below, any other videos or stocks you'd like analysed, and we can take a look. Thank you.